If you ever lost money in trading or investing, this video might be for you. Most traders struggle to make a profit, and we just accept that as reality. But why is that? In this video, we'll discuss the 7 most common reasons why traders lose money and how you can avoid making the same mistakes. I'll fill you in on the little secret that helped thousands of people learn to trade better. Just hit that like button and subscribe to our channel for access to the best trading content online. Let's dive in. One of the biggest problems for many traders is a lack of knowledge. It's essential to educate yourself on how the market works and what it takes to be successful. This means taking the time to learn about different trading strategies, market trends, risk management techniques, and let me tell you about my trading educations. Trust me, I paid for 4 different trading schools before finding the right one. I learned how to trade complex option strategies before understanding the basic principle of buying and selling. I rushed into the market and failed miserably before learning how to crawl and walk. You think knowing all of this information would make me a master trader? But it didn't. In fact, many people call themselves traders simply because they buy and sell shares. But when asked about how they analyze the stocks they buy or they sell, either they read reports in a newspaper or on our websites and occasionally look at online charts with their broker. They had little or no understanding of how to interpret the charts, and none of them had a plan or understood anything about money management. Unrealistic expectations are another reason why most traders lose money. Many hopeful traders think they can learn easily and cheaply, that they watch free YouTube videos and think they know everything about the market. These people seek for the holy grail of indicators, and they move on from one trading guru to another trading guru in the hope of turning the trading results around. Think of trading as like a degree, right? It takes 3 to 4 years to earn a university degree. Trading the stock market is a business, and those attempting to create that business needs to treat it like a profession. Failing to give this level of respect is a major reason why most traders fail to make money when trading the stock market. To be an educated trader, you need to combine a high level of knowledge with experience, and otherwise your chances of success over the long terms are low. Poor risk management is another common reason for trading losses. Traders often look at the return on a trade before considering how much risk they're taking on, and it's essential to have a clear strategies in place for managing the risk in order to protect your capital and maximize your chance for success over the long term. This may include setting your stop loss orders, diversifying your portfolio, and being mindful of your overall risk exposure to the market. Trading the stock markets inherently involves some level of risk. However, many people attracted to the market are willing to take higher risks. They might seek out instant gratifications, plunging their head straight into the stock market using complex strategies in the hope of profiting from their efforts. Sometimes traders don't even know what they're getting themselves into. Remember what went down with GameStop in 2021? People lost their life savings because they thought they could make a quick buck. Little did they know they were buying in at the top and losing somewhat 100% of their investment on the way down trading options. Unfortunately, many traders lose their hard-earned savings due to poor risk management on a daily basis. Risk to rewards ratio is one of the most important concepts I teach my traders to follow. It's about turning each trading opportunity into a no matter what moment that you just do it over and over again to achieve the long-term success. Click the link on the description below if you want to learn more. Emotional decision making can be a major hindrance in trading. It's easy to let your emotions get the best of you and make poor trading decisions. This might include getting overly excited about a potential gain and failing to set a stop loss order, or getting overly fearful and selling out of a position too soon. It's important to remain disciplined and stick to your trading plan even when emotions are running high. One way to do this is by using tools like stop loss orders to take emotions out of the equations and protect yourself from large losses. Lack of a clear trading plan is another common mistake. It's important to have a clear strategy in place for entering and exiting the trades. This might include identifying key support and resistance levels, setting profit targets, and defining your risk tolerance. Without a plan, it's easy to get caught up in the excitement of the market and make impulsive decisions that can lead to losses. Not staying updated on the market news and trends is another pitfall for traders. It's important to stay informed about what's happening in the market, as this can impact your trades. This includes keeping track of the economic indicators, company earnings, or geopolitical events. But don't get too caught up in in the news. More often than not, when the news tells you to should buy a stock, it's already too late. Trust the charts. Trust your plan and identify your risk tolerance. Finally, not being patient is a common mistake made by a lot of traders. It's important to give your trade time to play out and not get too anxious about the short-term movement of the market. It's also important to have realistic expectations about your potential returns and not get overly greedy. Take a step back and tune into your feelings. Tapping into your emotions is a great way to determine what to do next. If you're in a winning trade and you feel like the urge to stay in a longer, hoping to make a little bit more money, recognizing the greed there, get out of the trade, appreciate the win, and enjoy the rest of your day. Life is about more than money after all. To wrap things up, the 7 most common reasons traders lose money are the lack of knowledge, unrealistic expectations, poor risk management, emotional decision making, lack of a clear trading plan, not staying up to date on the market news and trends, and of course, last but not least, not being patient. By avoiding these mistakes, you can increase your chance of success in the market. Don't forget to click the like and subscribe to our channel for more trading tips and insights, and I will see you next week.